Question 1. Which of the following is a direct tax? Options: A. Sales tax. B. Entertainment tax. C. Excise duty. D. Estate duty. Answer: D. Estate duty. Question 2. The Narsingham Committee submitted its report to the government on. Options: A. Depoliticizing appointments in public sector undertakes. B. Import and export. C. NPA. D. Banking structure. Answer: D. Banking structure. Question 3. Grants in aid given by the center to the states as meant. Options: A. To cover the gaps on revenue accounts. B. For flood control. C. For boosting agriculture in the state. D. For financing state plan projects. Answer: A. To cover the gaps on revenue accounts. Question 4. One of the distinctions between public finance and private finance is that. Options: A. The state adjusts income to expenditure, while an individual adjusts expenditure to income. B. The state maximizes the general welfare of the public while an individual maximizes his own satisfaction. C. The state has no coercive powers while the individual has. D. The state cannot borrow money while the individual can get loans. Answer: A. The state adjusts income to expenditure, while an individual adjusts expenditure to income. Question 5. Essential services owned and controlled by government is called. Options: A. Public monopoly. B. Public utility. C. Public sector. D. All of the above. Answer: D. All of the above. Question 6. From the following, which is not a direct tax? Options: A. Tax on wealth. B. Tax on entertainment. C. Tax income. D. Tax on expenditure. Answer: B. Tax on entertainment. Question 7. The term GDP incorporates the economic activity. Options: A. Taking place within the geographical boundary of the country. B. Within the land territorial. C. Within water territorial. D. Within airspace. Answer: A. Taking place within the geographical boundary of the country. Question 8. The name of indirect tax is. Options: A. Income tax. B. Sale tax. C. Corporate tax. D. Wealth tax. Answer: B. Sale tax. Question 9. A tax takes away a higher proportion of one's income rise is termed as. Options: A. Proportional tax. B. Indirect tax. C. Regressive tax. D. Progressive tax. Answer: D. Progressive tax. Question 10. Deficit financing means. Options: A. Government spends in excess of revenue and capital receipt to that budget deficit in incurred which is financed by borrowing from the RBI. B. Difference of total expenditure and income revenue from all sources. C. Difference in borrowing in internal and external resources. D. Capital expenditure on items of public construction, public enterprises and public borrowings. Answer: A. Government spends in excess of revenue and capital receipt to that budget deficit in incurred which is financed by borrowing from the RBI. Question 11. The agency estimating the national income of India is. Options: A. Reserve Bank of India. B. Planning Commission. C. Ministry of Finance. D. Central Statistical Organization. Answer: D. Central Statistical Organization. Question 12. A regressive tax will tend to redistribute income more. Options: A. Equally. B. Equitably. C. Unequally. D. Inequitably. Answer. C. Unequally. Question 13. The effect of deficit financing is. Options. A. Never inflationary. B. Always inflationary. C. Sometimes inflationary and sometimes not so depending on conditions of the economy and the dose of deficit financing. D. None of these. Answer. C. Sometimes inflationary and sometimes not so depending on conditions of the economy and the dose of deficit financing. Question 14. Union excise duties are a part of central governments. Options. A. Tax revenue. B. Capital receipts. C. Non-tax revenue. D. None of the above. Answer. A. Tax revenue. Question 15. Borrowing from capital market is a part of. Options. A. Revenue budget. B. Capital budget. C. Both are and B. D. None. Answer. B. Capital budget. Question 16. Tax on incomes is. Options. A. Indirect. B. Both A and B. C. Direct. D. None of the above. Answer. C. Direct. Question 17. The Indian income tax is. Options. A. Direct and progressive. B. Obsessive. C. Indirect and proportional. D. Direct and proportional. Answer. A. Direct and progressive. Question 18. A restrictive monetary fiscal policy is a good way to deal with. Options. A. Demand shift inflation. B. Any sort of inflation that occurs when the economy falls below full employment. C. Demand pull inflation. D. Cost push inflation. Answer. B. Any sort of inflation that occurs when the economy falls below full employment. Question 19. Progressive tax in India is. Options. A. Income tax. B. Wealth tax. C. Corporate tax. D. Sales tax. Answer. A. Income tax. Question 20. Temporary tax levied to obtain additional revenue is called. Options. A. Fee. B. Surcharge. C. Cess. D. Rate. Answer. B. Surcharge. Question 21. Which of the following does not grant any tax rebate? Options. A. Indira Vikas Patra. B. Public Provident Fund. C. National Saving Scheme. D. National Saving Certificate. Answer. A. Indira Vikas Patra. Question 22. Annual financial statement is another name of. Options. A. Balance of payment. B. Fiscal budget. C. Budget. D. Debt and credit. Answer. C. Budget. Question 23. The need for deficit financing in India arises due. Options. A. Failure of the government to mobilize the desired volume of surplus for the public sector plans. B. The rapidly growing expenditure incurred by the government. C. Neither A nor B. D. Both A and B. Answer. D. Both A and B. Question 24. Development means economic growth plus. Options. A. Price stability. B. Social change. C. Inflation. D. Deflation. Answer. B. Social change. Question 25. Inflation means. Options. A. Increase in price. B. Decrease in value of money. C. Boom. D. All of the above. Answer. B. Decrease in value of money. Question 26. Which of the following is included in the calculation of gross domestic product? Options. A. Personal consumption expenditure. B. Gross domestic investment. C. Purchase by the government. D. All of the above. Answer. D. All of the above. Question 27. In a planned economy, the economic problem of what shall be produced is determined primarily by. Options. A. Computers deciding what consumers want. B. Direction by the government. C. The pattern of consumer spending. D. The independent decisions of entrepreneurs. Answer. B. Direction by the government. Question 28. A direct tax is one where. Options. A. Tax is levied always on property. B. Points of impact and incidence are different. C. Tax is levied on wealth. D. Points of impact and incidence are the same. Answer. B. Points of impact and incidence are different. Question 29. If an economy is in equilibrium at the point where plans to save and to invest are equal, then government expenditure must be. Options. A. Curtailed. B. Equal to government income. C. Increased. D. None of the above. Answer. B. Equal to government income. Question 30. Income tax is raised by. Options. A. Local government. B. Central government. C. Municipality. D. State government. Answer. B. Central government. Question 31. Liquidity trap is likely to result when. Options. A. Rate of interest at its lowest. B. Rate of interest at its highest. C. No change in supply of money. D. When an increase in the supply of money fails to reduce the rate of interest. Answer. A. Rate of interest at its lowest. Question 32. The term Hindu rate of growth refers to the 3.5% per annum growth rate achieved by the Indian economy over the first 6 5-year plans. The term was coined by. Options. A. Chakravarti. B. J.N. Bhagwati. C. Raj Krishna. D. K.N. Raj. Answer. C. Raj Krishna. Question 33. Funds, which do not belong to the government, are. Options. A. Consolidated fund. B. Contingency fund. C. Public accounts. D. None of the above. Answer. C. Public accounts. Question 34. To a layman, investment means putting his money in a financial asset like bonds, fixed deposit etc. What does it mean to an economist? Options. A. Purchase of machines. B. Stock of durable goods. C. Purchase of real capital assets. D. All of the above. Answer. C. Purchase of real capital assets. Question 35. The famous book written by J.M. Keynes is entitled. Options. A. Principles of Economics. B. Law of Markets. C. The General Theory of Employment, Interest and Money. D. None of the above. Answer. C. The General Theory of Employment, Interest and Money. Question 36. Deficit financing means. Options. A. Difference in borrowing in internal and external resources. B. Capital expenditure on items of public construction, public enterprises and public borrowings. C. Government spends in excess of revenue and capital receipts so that budget deficit is incurred, which is financed by borrowing from the RBI. D. Difference of total expenditure and income by revenue from all sources. Answer. C. Government spends in excess of revenue and capital receipts so that budget deficit is incurred, which is financed by borrowing from the RBI. Question 37. Which budget is measured in financial terms only? Options. A. Dominance budget. B. Program performance budget. C. Zero-based budget. D. Central budget. Answer. B. Program performance budget. Question 38. Which of the most important source of revenue to the state government of India? Options. A. Land revenue. B. Agriculture income tax. C. State excise duties. D. Sales tax. Answer. D. Sales tax. Question 39. For which of the following motives for liquidity preference, the demand for liquidity is determined by the rate of interest? Options. A. Transaction motive. B. Precautionary motive. C. Speculative motive. D. All the three motives. Answer. C. Speculative motive. Question 40. The problem of unemployment in rural areas is mainly due to. Options. A. Seasonal and underemployment. B. Frictional unemployment. C. Structural unemployment. D. Technical unemployment. Answer. A. Seasonal and underemployment. Question 41. What is not true for the classical theory of interest? Options. A. Demand and supply theory. B. Saving investment theory. C. Non-monetary theory. D. Monetary theory of interest. Answer. D. Monetary theory of interest. Question 42. Which of the following taxes are levied by the central government and collected appropriated by the states? Options. A. Estate duty. B. Stamp duties. C. Passenger and goods tax. D. Taxes on newspaper. Answer. A. Estate duty. Question 43. Which of the following is not a C4 characteristic of business cycles? Options. A. Recurrent in nature. B. Periodicity. C. Regular. D. Cumulative. Answer. C. Regular. Question 44. Customs duties, export duties, corporation taxes, taxes on capital value of assets, excluding agricultural land of individuals and companies are. Options. A. Taxes and duties levied by the center but wholly appropriated by the states. B. Taxes and duties levied by the center but collected by the states. C. Taxes and duties that accrue wholly to the union government. D. Taxes levied and collected by the union but which are shared with the states. Answer. C. Taxes and duties that accrue wholly to the union government. Question 45. NNP for a given year can be defined as. Options. A. Market value of final goods only. B. The market value of all final goods and services. C. The market value of all final services only. D. None of the above. Answer. B. The market value of all final goods and services. Question 46. Which of the following is not a fiscal monopoly? Options. A. Printing of currency. B. Minting of coins. C. Electricity supply. D. None of the above. Answer. C. Electricity supply. Question 47. Devaluation means. Options. A. Fall in marginal utility of money. B. Fall in printing of currency. C. Risk in black money. D. Fall in the value of money in terms of foreign currency. Answer. D. Fall in the value of money in terms of foreign currency. Question 48. Which one of the following is not directly the concern of the economist? Options. A. Choices relating to location of a steel plant. B. Bargaining between the workers' unions and the employers. C. Effects of a change in money supply. D. Imposition of tax to discourage cigarette smoking. Answer. A. Choices relating to location of a steel plant. Question 49. NNP, net national product, or national income is the money value of. Options. A. Final goods and services produced annually in the economy. B. Annual service generation in the economy. C. Tangible goods produced annually in the economy. D. Tangible goods available in the economy. Answer. A. Final goods and services produced annually in the economy. Question 50. Which plan recommended zero-based budgeting (ZBB) as a step to control public expenditure? Options. A. Fifth plan. B. Sixth plan. C. Seventh plan. D. Eighth plan. Answer. C. Seventh plan. Question 51. The goals of monetary policy do not include.